We'll talk a little bit about, how institutions are coming into crypto, and then we'll talk about, what we've learned with these institutions coming into crypto as well, and how, we at the Wormhole Foundation think about the future of institutions on chain. Um, I want to start off with a question. Do you guys know what the market cap of crypto is right now? Like, did anyone check
Yeah,
CoinGecko
I think I got a
this
pretty
morning?
good idea.
All right, what is it?
About $4 trillion.
Yeah, it's 4 trillion, right? If you actually think about the crypto market cap, right, and you think about how big this market has become, obviously, like from like 10 years ago or 5 years ago, we think the industry has grown so big. But if you look at more established markets in other industries, we're actually a really, really small slice of the entire fintech world that we see. Even if you think about, what's been the most successful market cap addition for this cycle, it's been Hyperliquid. That's only added $12 billion to crypto market cap in total, right? Where we see the next evolution of addition and how we make this industry bigger is bringing these partners on chain. It's kind of crazy to think that the next sort of milestone that we will cross is the insurance market. And then if you come sort of to the corner, this is what Rusty was talking about as well, the derivatives market, this is more volume than market cap, but it's like a quadrillion-dollar market that we can sort of onboard with crypto rails. Even if you think about, these big institutions, the funds that they have and the offerings that they give, some of these, the market caps of some of these like funds, like in fact, like the Vanguard Treasury Market Fund, that's a $330 billion fund. Imagine onboarding these sort of institutions on chain and making it accessible for everyone else. Now, what is tokenization? Again, if you're newer to crypto, this deck is golden for you, which is why this deck works really well with banks. If you're in the industry for a while, this is probably more of a recap to what you already know. Essentially, tokenization is the process of bringing anything onto the blockchain in digital form so that it becomes tradable and it accesses liquidity that's available on the blockchain. If you think about sort of traditional assets right now, I'm from India. The Indian stock market trades from 9 to 3 p.m. There's also this sort of pre-market area where a select number of brokers are able to facilitate pre-market deals. If you think about it from a retail market perspective or a retail trader perspective, it's really unfair that some of these bigger institutions get to trade pre-markets. They're able to move markets. Another problem that, as I'm sure everyone's aware of, if there's something that happens on a macro scale on the weekend, you have to wait till the following Monday to actually make something happen or actually, assess your trades accordingly. Here are some of the problems that we see with the traditional asset space. And then if you sort of look forward on why asset managers are tokenizing, there is greater liquidity. There is the possibility of creating like 24/7 markets. There is the possibility of real-time settlements. There is no sort of border access. Like if in Argentina they're accessing stablecoins, I don't know if you guys know, but in Argentina there's like a limit on how many US dollars a citizen can hold. Stablecoins and those sort of opportunities lets them hold to counteract the inflation that they've been sort of dealing with. In terms of Argentina, the highest stablecoin adoption rate is in Argentina, and it's because of the inflation rate that they're facing. If you sort of look at where stablecoins are the most accepted in the world right now, there's a high correlation between stablecoin acceptance and inflation rate. And then if you think about what's next in terms of what they will do with stablecoins, right now people are accessing yield on chain. What they will be able to do in the future is access yield from a player like BlackRock, a player like Apollo Global, and these bigger private credit funds that will come on chain. So who's actually doing this, right? Like, at the Wormhole Foundation, we work really closely with a lot of these partners. We work with Securitize, who is an exclusive tokenization partner with us. We work with BlackRock, we work with Apollo Global, we work with Van Eck, we work with Mercado Bitcoin in Brazil, we work with Hamilton Lane, we work with about 9 or 10 different partners within this realm. A lot of them are really, really interested in all these possibilities that these new tokenization rails enable. One thing that I also want to mention is, I spent a lot of time in Hong Kong, in Japan. It's my first time in Seoul. But whenever I talk to a traditional bank, one thing that they always mention is when BlackRock came on chain, that was a signal to everyone that this is something that will become normalized. This is something that they've come in early at, and there's a lot of interest in doing this on the blockchain from like local banks in all these different regions, which is why we're really excited about the Fogo mission as well, because Rob and the team have shown a direct interest in having RWAs on chain day one, and it's definitely something that we at the Wormhole Foundation are very happy to be working with them on directly. I wanted to include this slide. This is not a slide we show the banks. By the way, this is a lot more, crypto native, I'd say. I feel like Pump Fund has sort of eluded the intricacies of what tokenization happens, and you can launch a ticker with one click. But essentially, this is like the BlackRock Biddle Fund. It's about 2.1 billion AUM. I checked this morning. A lot more steps than you think. It's not a one-click deployment, and then you sort of have the multi-chain deployment that the Wormhole tech stack enables for them as well. In terms of where Wormhole fits in, we're like a digital asset network. Essentially, think of it in a way where if you are a tokenization platform on one chain and you wanted to access liquidity users on a different chain, you can use the Wormhole tech stack to do the same. We also work with the PIT team really closely. We are going to work with the Fogo team really closely day one as well. So yeah, we're a lot of exciting announcements coming up from our end in the Fogo ecosystem. One thing that we get asked a lot, why multi-chain? If you're active on crypto Twitter, it's an active debate in terms of if projects should be multi-chain day one or not. I'd say it depends on the project, but in terms of a tokenization partner or a stablecoin, we believe that them having a multi-chain strategy day one is really, really important. As a stablecoin, when your metric is TVL or market cap or as many users as possible, you would want to build liquidity as many different markets as possible. You would want to be in front of as many different people as possible, and having presence on different ecosystems enables that. I want to leave you with this thought, and this is where we'll talk a little bit more about where the DeFi side of this enables. We're at about 30 billion in RWA market cap. If you think about the market cap that we talked about in crypto was 4 trillion, that's less than 1%. If you think about where the next wave of crypto market cap is going to come from, it's going to come from here. The market cap of like tokenized assets, it's became 2x since the start of 2025. We're seeing a rapid increase in the trend of RWA assets coming on chain. But then the question comes, and this is the talk that Saeed was going to give, and he was going to focus a lot more on this, but where does DeFi utility sort of come into this entire picture, right? We bring these RWAs on chain, then what? If I think about my dad, in India, investing into mutual funds, like a basket of stocks is a very popular option for the average retail investor. Surprisingly, you can't really do a lot with those mutual funds. Like you can sort of reinvest into them. You can have like a systematic withdrawal plan, but there's not a lot otherwise that you can do. Now imagine if those mutual funds were on chain. He could supply them on Aave, take a loan, loop back. As crypto investors, we're used to doing things in a different way, but if you go out there and talk to a typical retail investor, looping to them is wild. Like imagine looping your mutual funds 3 times and getting like a 40% exposure. Like when I talk to my dad about these things, it's unreal to him. The fact that you can use, the BlackRock Biddle Fund and supply to Drift as collateral is wild. What RWAs on chain would enable is, I always like to call them vehicles of opportunities in a way where you enable so much more. You enable, people in Hong Kong to be able to trade US assets, for instance. You enable people in India to trade Japanese assets, for instance. As we move forward, the economy is going to be more intertwined. The blockchain will erode borders, per se. it's not a question of, how this will happen. It's just a question of when. Thank you. Thank you very much.